So, good morning everyone. So, again, today, second concept lecture tayo for inventory. I'm sure based on our meeting last discussion, medyo overwhelmed kayo in terms of like the whole inventory system. And I apologize for parang extending the time, pero super important lang na matapos ko yung perpetual. Today, para fair for everyone, isang run through ulit of perpetual, and then we'll officially study periodic. And then I'll give you a sample problem na I want you to answer with me. So honesty system naman, but it will really help you. Parang for me, perpetual periodic, ito yung long well, not that I know what's gonna happen in the exam, but generally, if you really want to perform well in inventory, it's really the inventory systems that you have to understand. So with that said, what is the difference between perpetual and periodic? Simply, it's when they record cost of goods sold. So perpetual, again, paulit-ulit, perpetually updates. So every time may sale, ina-update niya yung cost of goods sold. Okay? Cost of goods sold is the expense related whenever you sell something. On the other hand, periodic, as the name suggests, it's only at the end of the month that they record cost of goods sold. So again, perpetual, every time a sale occurs, we record a cost of goods sold. Periodic, only at the end. So now the question is, how do we account for these two? So again, for regardless of the inventory system, there are three major components that you have to master: purchases, sales, and end of period adjustment. So purchases has 4 concepts you have to be good at. Sales have 3 concepts, and end of period has 2. So for purchases, we're gonna be looking at Toys R Us. For purchases, there are only 2 variations of this. When you buy inventory, you either buy it on credit, meaning inutang mo, or via cash. Regardless, it's gonna be debit inventory, and then credit accounts payable, or credit cash. Yun lang. So when you're encountered with this kind of information, the first step is you can ignore muna these 3 terms. Just go for ano ba yung total price. So once you know the total price, if it's on credit, debit inventory, credit accounts payable, 72,500. Pero pag cash, debit inventory, credit cash, 72,500. So straightforward. So for now, just know na pwedeng bayaran by cash. But I'm telling you now, most of the time, inventory will be bought on credit. Okay? On credit. So there will be numerous numerous purchases throughout the months. So parang bibili ako batch 1, September 5, 100,000 worth of inventory. September 15, I'll buy 200,000 worth. So within the 2 months, I have 2 major purchases. Ang gusto kong bantayan nyo is that every time you have an inventory purchase, may kaakibat siya or there's an equivalent accounts payable na buo. And over time, masi-zero out mo yan kasi you'll eventually pay for it in full. Meaning, I want you to think about accounts payable na purchase batch 1, may accounts payable na buo na masi-zero out. Purchase batch 2, may second accounts payable. So, think about the utang per purchase batch. So that's the only thing na I'm gonna remind you by. So I'll show that later. But so we're done with purchases. So again, debit inventory, credit accounts payable, or cash. Now, the next concept would be FOB shipping point and FOB destination. So I won't go into the discussion. I'll just go into ano ba yung kailangan nyo matandaan. So BSP, so buyer shipping point, BSP, so buyer shipping point, we record. So we record the journal entry because we're the buyer. FOB destination point or SDP, destination point, you don't record if you're the buyer. It's the seller that will record. So, ang importante sa buyer is FOB, shipping point. So, meaning, ang kailangan lang is debit inventory in cash, debit inventory, credit cash. Bakit tumaas yung inventory? It's because the cost for you to bring the inventory that you will sell increased kasi nagbayad ka ng freight. Right? So, simplified sa freight, if you're in the buyer's perspective, you will only record pag nagbayad ka. Pag hindi ka nagbayad, then sino yung nagbayad, siya yung magre-record. So, in destination point, it's the seller that pays. Kaya no entry from the buyer. So, for this, dalawa lang yung scenario. FOB shipping point and destination point. From the perspective of the buyer, si buyer lang yung mag-record sa BSP, buyer shipping point. So, debit inventory, credit cash, 5,250. And then, there are two other remaining concepts. Purchase return and allowance and purchase discount. So, purchase returns and allowance is kapag nagkaroon ng damage, may inferior quality or not in terms of like the purchaser's specifications, susoliin niya. And therefore, ang mangyayari dito would be, bababa yung cost of inventory mo. But correspondingly, that accounts payable that's attached to your inventory, bababa rin yung kailangan mong bayaran. So therefore, memorize that for PRA, it's just gonna be debit accounts payable, bababa yung utang, credit inventory, bababa yung value ng inventory. So here, in terms of the 7,250 raw yung allowance because yung minion hindi up to the specifications. Therefore, ang journal entry lang is debit accounts payable, credit inventory of 7,250. So, yung accounts payable mo, if you have a T account for this, una, it started off with may utang ka ng 72,500, bababa siya ng 7,250. And then finally, you have purchase discount. So again, sa purchase discount, ang titingnan nyo dito is the terms. 210 means yung 2 refers to the percentage of the discount. So 2, 2%. Pag 5, 5%, etc. etc. 10 is within the days. So 2% cash discount if you pay within 10 days. And then yung N30 is regardless, kailangan mo akong bayaran in 30. And then, some things to take note when you're counting, IFCL. Ignore first day, count last day. So, January, 210 and 30. January, I have to get 2%. Pag nagbayad ako ng utang ko, I'll get a 2% discount within 10 days. IFCL. Ignore first day, count last day. So, from January, I'll start with January 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. January 11. So, meaning, if nagbayad ako ng January 11 or earlier, I'll get a 2% discount. If January 12, I won't get the discount. So again, ano pang mga 110 EOM. 110 EOM means 1% discount 10 days after the end of the month of the next month. So, January 1, ang term is 110 EOM. Ang mangyayari dyan is, hindi ako magsa-start sa January, I'll start with February. Right? So, February, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. So, February 10. 110 EOM. So, ganun lang yung So, there are two scenarios lang naman dyan. Either you pay early, so you get the discount, or hindi mo na take yung discount. So, pag walang discount, mas madali. Debit accounts payable, kasi babayaran mo na yung utang mo. Credit cash, binayaran mo yung utang mo. Bumaba yung cash. Pag nag-discount taken, pareho lang yung debit ng accounts payable mo. You will zero out the accounts payable related to the purchase. Ang maiiba lang is how much cash you will pay out. So it's gonna be a compound journal entry wherein the first thing that I want you to do is step 1, zero out your accounts payable with the debit. Step 2, identify the value of the discount. So bababaan mo yung inventory. And then step 3, just solve for the cash amount that will make sure na balance yung journal entry mo. So for this, let's look at the example. If it's discount taken, what will happen is, discount not taken is, after 10 days ka nagbayad, yung remaining balance ng accounts payable mo is 65,250. So yun yung i-zero out mo. Debit accounts payable, 65,250. Cash, 65,250. In the other scenario, same pa rin. You will still zero out your accounts payable at 65,250. But please be careful on where you apply your 2% discount. It's not on the 72,500 invoice. It's the remaining balance dapat. So, kung ano yung nanditong figure, 65,250, yun yung mumultiplyan nyo ng 2%. So again, for discount taken, for those that memorize their journal entry, what you need to do is step 1, zero out your accounts payable using a debit, 65,250. Number 2, step 2, is you have a credit of inventory that is equal to the discount. So you multiply the discount not dun sa 72,500, but parang dun sa 65,250 na remaining balance. So again, paano mo nakuha yung 65,250? 72,500 minus the returns and allowances from before at 7,250. So now ito yung balance, ito yung utang na kailangan natin bayaran. Times 2% is 1,305. So meaning, kung may discount ka na 1,305 in the form of a credit in inventory, ang babayaran mo na lang is 63,945, which is basically how to make this balanced with 65,250. So with that quick discussion, expert na tayo dapat in terms of purchases, in terms of inventory. So again, for purchases, there will be 4 things you should always watch out for. And this is for every purchase, ha? So this is for every purchase batch. Every purchase batch, you ask yourself, did I pay for it in cash or in credit? If it's in credit, it's accounts payable. Number 2, you ask, sino nagbayad ng freight for that purchase? If it's FOB shipping point, so BSP, buyer pays, you record a corresponding increase into your inventory. And then the last remaining is, may nagsoli ba in a purchase return and allowance? If may nagsoli, kailangan bumaba yung inventory mo, pero bababa rin yung utang na babayaran mo. And then finally, sa purchase discount, you have to know how to count the dates so that you know whether the discount is taken or the discount was not taken. So in the event that it was taken, yung accounts payable mo will still be zeroed out, pero your cash will not be equivalent na to the accounts payable. So 65,250 yung utang mo, but technically, ang binayaran mo na lang is 63,945 because of the discount. So 2 things I want you to be a master at. If ever, kuwari, binigay sa inyo yung ending balance, tapos hindi sinabi yung magkano yung PRA or PD, I want you to be a master of the T accounts for inventory. So inventory, ang nagpapataas sa inventory ay purchase and freight. Ang nagpapababa dun sa value ng inventory is purchase return and purchase discount. So that's one thing you have to master. So important yung slide na to. Another important thing na I want you to master is that for every batch of inventory, meaning batch 1 is 72,500, meron kang corresponding accounts payable na 72,500 na once nabayaran mo, should be zeroed out. Meaning, 72,500 yung purchase, pero ano nagpapababa dun sa utang mo? 7,250 na PRA. And then, may 65,250 ka na binayaran mo na. Or 60,500 na sinettle mo na yung obligation mo. So, for every batch of purchase, bantayan niyo yung accompanying accounts payable for each of that. So, I know there are different accounts that might affect your accounts payable, but i-subdivide nyo na yung accounts payable that's related to the purchase. Yeah. So before I proceed, are there any question? Kapag sa actual problem, hindi po ba isasama sa isang journal entry yung sa inventory and the shipping, yung inventory pa rin? So for this, Depende. So, for me, ako, may advice to you is paghiwalayin nyo na lang muna. Why? Because sometimes, so ang tanong yata is, do we join this together, this journal entry? For me, okay lang sa akin na paghiwalayin nyo, unless explicitly requested. Kasi, sometimes, ito cash, ito accounts payable, na pwede nyo rin naman i-joint journal entry, pero para lang just so that matrack nyo kagad kung ano yung frame, paghiwalayin nyo na lang kagad. Right? So, any questions sa purchases? Clear pa naman so far? Kindly thumbs up if everything's clear para we can proceed. Okay. So, next. The next portion is 3 journal entries in relation to sales. And dito papasok yung special feature ni Perpetual. For Perpetual inventory system, for every sale, you have to make 2 journal entries. One is to recognize revenue. For us, madali lang to. That would be cash or accounts receivable, depende kung binayaran ka in cash or in credit. Credit, sales revenue. Tataas yung revenue mo. Pero, the second one is COGS inventory. So, palagi pag perpetual, every time may sale, automatic, it's AR, sales revenue, debit COGS, credit inventory. So, the COGS in debit COGS, credit inventory signifies na finally, from asset, ine-expense mo na yung inventory. Kasi may nabenta ka na. Remember the Geely example, right? So, ang only difference lang is cash ba or on credit yung ano. Pero generally, you have to journalize 2 journal entries. One to recognize the revenue, another is to recognize the expense that's related to it. So, pare, ito, ang revenue mo is 75,000 and then yung cost of that inventory that you sold is 38,450. Dalawa yung journal entry mo. Debit AR, credit sales, 75,000. Debit COGS, credit inventory, 38,450. And then, the only difference lang is paano kung cash, right? So, cash, ang mangyayari would be debit cash, credit sales revenue, and then debit COGS, credit inventory, 38,450. So far, clear pa naman yung 2 journal entries. Kindly thumbs up if everything's clear. Yeah. Okay. So, sales, very straightforward. You make 2 journal entries. Now, dito na nalilito yung ibang tao. Bakit raw kapag may sales return and allowance, ganito yung journal entry? So with this, I want to just quickly go to an Excel file. Can everyone see the Excel? Sorry. So you have normal sales, right? Ano yung dalawang journal entry mo pag nagkaroon ka ng sales? That would be AR, so accounts receivable, sales revenue. Let's say 100,000. And then yung cost ng inventory na yon is COGS inventory 50,000. Right? So ito yung sa normal sales. So dalawa yung journal entry natin. We increase our revenue and then we recognize the decrease in the inventory sa COGS. Now, the problem here is that customer may be dissatisfied with the merchandise sold. So, isusulit nila yung kinuha nila. Therefore, revenue pa rin ba pag sinulit nila? Definitely not, right? So, what will happen? Kailangan mong i-reverse a portion of the revenue that you recognized and i-reverse yung expense that you recognized. So, let's say, half returned kasi hindi maganda. So, ang knee-jerk expectation natin would be, if they returned half, the journal entry to reverse this would be, to reverse it would be sales revenue, and then bababa yung accounts receivable natin. By how much? If they returned half, then half would be what? 50,000. Pero yung 50,000 na to, may nakaakibat na cost of your inventory that you have to reverse also. So, if COGS inventory, dapat ito, inventory. COGS. So, tataas yung inventory mo kasi binalik sa'yo eh. So, the question is, how much yung inventory in COGS? Magkano tong inventory in COGS na to? Kindly type in the chat what your guess would be. So, kung half yung sinole, how much yung inventory, what's this monetary amount? Is it still 50,000? Yeah. Kindly type in the chat kung ano yun. Okay. Yeah. Okay, I can see some. Nag-ano. So the answer here would be definitely not 50,000. It's 100,000, half of it, in order to get, so 1/2 siya. So therefore, yung ibabalik mo lang would be 1/2. So therefore, it's 25,000. 25,000. So normally, ganito yung expectation natin. 3 out of these 4 accounts are correct. Ano lang yung iba? This sales revenue. Because rather than sales revenue, we're introducing a new account called sales return and allowance, which is a contra asset. So it's a contra asset na revenue. So basically, you have a T account for revenue, sales revenue. May T account ka rin for sales returns and allowance. Pero yung normal balance ng sales return and allowance, if ang normal balance ng, so if you have a T account, so let's just say this is a T account, sales revenue, the normal balance of a T account ng revenue would be credit, right? So you have a sales revenue account and the SRA account, which is basically contra sales revenue. And therefore, the normal balance of an SRA is a debit. So, ang mangyayari is, if my sales revenue right now is at 100,000, yung debit ko dito is the 50,000. So if I ask you, how much is your net sales? It's still 100,000 minus the contra revenue account of 50,000. So my net sales will still be 50,000. So ang importante lang is, and for those na is step 1, i-reverse nyo lang yung journal entry to record the sale. And then be careful in terms of the proportion lang of how much was returned. And then number 2, kindly take note that the debit is not sales revenue, but sales return and allowance, which is a contra revenue account that has a normal balance of a debit. So, yun lang yung titingnan nyo for sales return and allowance. So, ito yung journal entry ng sales returns and allowance. So, technically, ni-reverse mo lang, but meron kang special account na SRA, right? So, with this, ang ni-return raw is 7,500. So, therefore, ang mangyayari is debit sales returns and allowance of 7,500. So, ito yung selling price ng ni-return. And then, ito yung cost na you have to put back. So, debit inventory, credit COGS of 3,845. And then lastly, you have your sales discount also. So, same concept as purchase discount. Sometimes your customer will pay early, so they will get a discount. Sometimes they won't pay early, so they'll pay the full price. So, in scenario 1, mag-zero out ka naman ng accompanying accounts receivable. So, debit cash, 67,500. Credit accounts receivable of 67,500. So, yung 67,500 is the remaining balance of the accounts receivable that you expect for this sale, right? So, 75,000 minus the SRA, that will give you your accounts receivable. And then here, kapag yung discount, so how do we solve for discount again? Step 1, zero out any corresponding accounts receivable for that particular purchase. So, alam natin na 67,500. Now, imo-multiply natin yung sales discount of 10%, not with the sales price before of 75,000, but the current balance of the accounts receivable. So, next step is you find the debit of sales discount, which is 10%. So, times 0.1. So, 6,750 yung debit ng sales discount. And then finally, the last step is you squeeze cash with 60,750. And then, basically, sales discount is similar to SRA, is a specialty account that has a normal debit. So, net sales will always be an interaction of these three. And then, ang tatandaan nyo lang is for accounts receivable for every purchase, dapat na-zero out siya. Kasi nakukuha mo dapat yung cash for this particular transaction. There. So, finally, adjusting entry, like what I've mentioned, you will have an inventory balance using your T account, but at the end of the day, ang masusunod is the physical count. The physical count is higher or more accurate than your record. Therefore, dalawa lang naman yung possibility. The physical count is higher in terms of your record or lower. So, susundan mo lang siya. If it's higher, you have to increase inventory. And again, every time you increase or decrease inventory, usually, ang kapartner niya would be cost of goods sold, right? So, if you increase inventory debit, your corresponding credit would be COGS. If you decrease inventory, if the physical count is lower, the debit would be cost of goods sold, right? So, here, based on your record, it's 34,590, but then the count is 3,500. So, we have to increase inventory by 410. So, debit inventory, credit COGS of 410. Ito, baliktad. We had to decrease it back down to 30,000. So, credit inventory, 4,590. Debit COGS of 4,590. So, finally, the last step would be closing entries. Pero ang special lang dito is the one when you close out revenue because you will have SRA and sales discount. Yun lang, yung difference. And then sa income summary naman in terms of like expenses, just expect that you have a cost of goods sold. So with that said, quickly, we just wanted to run down the perpetual for those that are still having a hard time. So I know, sorry dun sa mga gets na, the reason why I'm being redundant about this is because I want you to be stable in terms of perpetual, and then mag-periodic na kasi tayo in the next step. So, please make sure na you know all of these 9 concepts because periodic is just slight tweaks for this. So with that said, are there any questions or clear naman so far all the journal entries? Kindly thumbs up na lang if everything's clear. Okay. So, periodic, same. Same 9 concepts. Ano lang yung differences? 3 lang yung differences ng perpetual and periodic. So, sa perpetual, there are, bibili ka na inventory, shipping point or destination point, PRA, and then purchase discount taken. So, ito yung journal entries. This is your thing that you have to memorize. Now, ano lang difference ng periodic? I'll be straightforward with you. Pareho lang yung debits and credits niya. Ang nag-iiba lang is the name of the account. Sa perpetual, lahat inventory. Pansinin niyo yun. Debit inventory pag shipping point. Credit inventory. Depende on the PRA and PD. Ito, we will just put actual names or temporary accounts. So for purchase, it's debit purchase, pero same pa rin yung credit, cash and accounts payable. Kapag shipping point, it's gonna be freight in, debit, credit, cash. If it's destination point, no entry. Purchases, returns, and allowance, debit accounts payable, pero credit, PRA, or purchase returns and allowance. Debit accounts payable for purchase discount, cash, purchase discount. So ano lang yung naiba? Sa perpetual, inventory sila lahat, which is a permanent account. For periodic, they will use 4 new temporary accounts na iba-iba yung pangalan. So the clue lang is what happened. So pag purchase, purchases pangalan. Pag freight, freight in. Pag PRA, credit PRA, and pag purchase discount, credit purchase discount. Yun lang. Same journal entries, iba lang yung pangalan. So, first, periodic nuance. Initially, there's no inventory account for purchases. Meron lang siyang 4 new temporary accounts. Purchase, freight in, PRA, PD. Ano yung normal balance nila? The normal balance of purchases and freight in, because normally they increase inventory, will be debit. While your PRA and PD is a contra asset account similar to your SRA or sales returns and allowance and your SD or your sales discount. So pag SRA or returns and allowance and discount, palagi ang normal balance nila would be the opposite. Right? So credit naman siya ng inventory. So credit, so again, memorize purchases and freight in, normal balance is debit. PRA, PD, normal balance is credit. So let's try. So presented below is the information related to Emily Cove. So pag-compare natin, on April 5, purchase merchandise from D. Ravine Company for 19,000. So on your own, anticipate na journal entry. What should be our journal entry for this? If you purchase merchandise and then may term, automatic, the giveaway is this is on credit. So ano, again, pag may nakita kayong terms, 210 and 30, automatic, this is on credit. Automatic. I don't need to explicitly say cash. Pag may nakita kayong terms, it's on credit. Kasi meaning, binibigyan ka niya ng leeway when to pay. So, therefore, ang journal entry natin here is debit inventory, credit accounts payable of 19,000. Right? So, debit inventory, credit accounts payable, 19,000. Tumaas yung inventory. Ano yung sa periodic? Honestly, same. Pero instead of saying it inventory, debit purchase, credit accounts payable. So ito lang yung difference. Perpetual, periodic. Debit inventory, credit AP. Debit purchases, credit AP. Ang naiba lang is pangalan, pero technically it's the same journal entry. Number 2, you paid freight costs. So pag ikaw yung nagbayad, ikaw yung magre-record. So what kind of shipping is it? It's gonna be BSP. Buyer shipping point. So buyer will record. So it's a BSP, FOB shipping point. So here, since ikaw yung nagbayad, ano ulit yung journal entry kapag freight? Debit inventory, credit cash of 800. So ano sa periodic? Pareho lang pero mag-iiba yung pangalan ng inventory, magiging freight in of 800. Number 3, On April 8, return merchandise which cost 4,000 to Deravin Company. So may PRA ka or purchase return and allowance. Ano yun sa perpetual? Bababa yung accounts payable that you need to pay, pero bababa rin yung inventory. So it's debit, accounts payable, credit, inventory of 4,000. So same yung journal entry sa periodic, pero rather than inventory, ang pangalan niya is purchase returns and allowance. So it's the same journal entry, just a different name for periodic. On April 15, the amount due to their Deravin Company is paid in full. So the question is, may discount ka ba or not? So paano natin malalaman, right? The next question na I want you to ask is, what are the terms? Every time may discount question, you ask yourself, what are the terms? What is the date right now? Is the discount applicable? And therefore, saan mo, what is the invoice cost minus our purchase returns and allowance? So what are the terms? Ang purchase date natin is April 5. Our terms is 210. So IFCL. So IFCL is ignore first day, count last day. April 5, so ang first day ko is April 5, so I will ignore that. So April 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15, April 15, yung last day for you to be able to pay. Sakto, dun ka nagbayad. Therefore, you're applicable to a discount. The next question is, how much yung discount? If 210 and 30, the discount will be 2%. So, alam na natin 2%. So, saan natin i-multiply yung 2%? Not in the invoice price, but not in the invoice price of 19,000, but 19,000 minus the 4,000 purchase return. So, 15,000 yung AP balance natin. Right? So, therefore, ang ano natin would be, so, how were we able to get the 19,000 minus 4,000 is 15,000. So, ano yung watch out ko dito? Ang titingnan nyo is yung accounts payable, hindi yung inventory. May mga iba ang ginagawa nila, 19,000 plus 800 minus 4,000, yun yung balance raw. That's wrong. Ang titingnan nyo lang is yung accounts payable. Yung accounts payable of 19,000 and yung 4,000, so 19,000 minus 4,000 is 15,000. Yun lang yung accounts payable that you have to pay. So be careful na your shipping point or your freight ins don't really affect your purchase discount. So be careful with that. So again, ulitin. Sa purchase discount, ang kailangan mo lang naman gawin is to zero out the accounts payable related to that purchase. And right now, our accounts payable balance is 15,000. And then yun lang yung imumultiply mo ng 2%. So 15,000 times 2% is 300. So isi-squeeze lang natin yung credit cash of 14,700. So now that you know this, ang pagkakaiba lang ng perpetual sa periodic is yung name. Debit accounts payable per yen of 15,000, credit cash of 14,700. Ang nag-iba lang is yung name na purchase discount. So, kaya ang gusto ko, expert kayo sa perpetual. Kasi, kapag perpetual kayo, ang adjustment lang na gagawin nyo is same journal entry, iibahin nyo lang yung pangalan ni inventory. Purchases, freight in, PRA, purchase discount. Ang normal balance nila ulit ay kapag purchases and freight in, debit yung normal balance. Pag PRA or PD, credit yung normal balance. So with that, we're done with the first nuance of periodic. Yun lang yung difference. Sa purchases, ang nagkaiba lang is yung name ng account. Let's go to sales. For sales, sa perpetual, you will record two. One, to recognize revenue. One, to match the expense, cost of goods sold. Kapag may sales return and allowance, on the other hand, pag periodic, ano yung ulit yung difference? Yeah. Ano ulit yung difference? Ano worries? Ano ulit yung difference? For periodic, we only recognize cost of goods sold at the end of the period. Meaning, every time may sale ka sa periodic, isa lang yung journal entry mo. AR sales lang. The one to recognize the revenue. So here, in journal entry number 6, sa sales returns and allowance, ang nangyari is, ni-reverse natin yung revenue, ni-reverse natin yung matching expense. For periodic, we will still reverse the accounts receivable, the revenue, pero walang COGS account. So, yun lang yung difference. Pag may sales discount, same lang yung journal entry. And then pag may freight out expense, ito lang yung journal entry. Right? So, ano lang ang difference? Nuance 2, for periodic, we do not compute the cost of goods sold every sale transaction. We only compute cost of goods sold at the end of the period. So, ito, let's go to Said Company. So, si Said, sales transactions naman to. So, si Said sold 570,000 of merchandise to Shepherd Co. The cost of the merchandise sold was 350,000. So, here, ano yung gagawin natin? For perpetual, dalawa yung journal entry. Debit accounts receivable, credit sales revenue of 570,000. So, journal entry 1, recognize the revenue. Journal entry 2, match the COGS. Debit COGS, credit inventory of 350,000. So, 570,000 is the selling price. 350,000 is the cost of the inventory that you were able to sell. Now, ano yung sa periodic? Sa periodic, same pa rin. AR, credit sales revenue of 570,000. Pero no entry to match COGS. Yun lang. That's the only difference. So, dalawang journal entry kay perpetual, kay periodic, isa lang. Because we do not recognize cost of goods sold every time there's a sale under periodic. So, may shipping costs ka raw for 30,000. Now, ikaw yung seller for this portion. So, remember our discussion, sino yung nagbayad? Siya yung magbe-bear ng expense. So, under perpetual, meron kang debit freight out, which is an expense. So, freight out is an expense. Credit cash of 30,000. So, freight out is an expense. Sa periodic, same lang. Freight out, 30,000. So, ito lang yung parang seller perspective, right? So, third, nag-grant round ng allowance of 20,000 per merchandise, costing 10,000. So, may nagbalik ng 20,000 worth of inventory. So here, ang journal entry natin is always dalawa. They recognize a portion of the revenue and then bring back a portion of the inventory. So, ni-reverse lang natin yung accounts receivable with our SRA account of 20,000. And then, we increase our inventory by 10,000, tapos binawasan natin yung COGS by 10,000. This is our perpetual journal entry. Sa periodic, same pa rin. We will they recognize a portion of the revenue through the SRA account and then bababa rin yung accounts receivable then i-expect. Pero isa lang yung journal entry niya because there's no entry related to cost of goods sold sa periodic. Again, walang journal entry to recognize cost of goods sold sa periodic whenever there's a sale. So lastly, you will have defective inventory of 20,000. So ito, magkakaroon tayo ng different iterations. So, merong different ways na magkakaroon ng returns, right? Merong mga ibang terms like mga parang nag-return raw siya ng defective inventory with 20,000 pero may realizable value of 5,000. Kasi ano yung una nating example? Iteration A is nag-return siya ng 20,000 pero costing 10,000. That's iteration A. Ito yung journal entries natin for this. Iteration B is may some exercises or examples na ang sasabihin is nag-return ka na inventory worth 20,000 pero ang realizable value is 5,000. So kung yun yung binigay, the journal entry would be 5,000 COGS. So realizable value yung gagamitin nyo pag hindi binigay yung cost of the inventory return. Pero yun lang, same concept. Sa perpetual, ito pa rin yung journal entries. Sa periodic, isa lang. No entry to match COGS. So, in a way, periodic is a bit simpler during the sales transactions. Iteration C. Nag-return ka ulit ng 20,000, pero ang nakasabi, the returned purchase merchandise is deemed no longer saleable. The cost of the items is immaterial. So, iteration C, hindi mo na mabenta, pero the cost of the items is immaterial. Paano natin i-journal entry? Same pa rin yung first journal entry. Pero ito, debit inventory credit COGS of 0. So technically, wala ka rin journal entry here. Pero 0 to. Kaya kasi, bakit 0 na? Kasi deemed no longer saleable and the cost of the items is immaterial. So no entry to match COGS. So iteration C, 0 na. And then technically, this translates to no journal entry. Iteration C, nag-return ka ulit ng 20,000, it costs 10,000, pero sinabi sa'yo, it's considered no longer saleable, the item is material, we will have loss on defective inventory, which is basically an expense, credit COGS of 5,000. So ito lang yung journal entry sa iteration B. So basically, instead of cost of goods sold, we're transferring it to a new expense account called loss on defective inventory kasi hindi mo na siya mabibenta. So, the reason why I'm showing you these 5 iterations is nag-iiba yung journal entries natin for each of the iterations depending on ano yung sinabi sa inyo. So, merchandise was no longer returned. Dahil walang binigay na monetary unit, 0. Kasi no longer able to return. So, for me, let's go back to the original, costing 10,000. Ang major point ko lang dito is sa purchase returns and allowances, there are 5 scenarios. Either they will, scenario 1, which is the original, they will tell you yung cost. So you use the cost. Scenario B, they'll give you your net realizable value. So you can use the net realizable value. Scenario 3 and 4 is no longer saleable yung binalik sa'yo. So the only difference is material ba siya or immaterial. And then the last scenario is hindi na siya no longer required to be returned. So, I will upload the PDF version of this PowerPoint. Please understand and study the different variations of sales returns and allowance. Kasi in the exam or in the quizzes, baka iibahin lang yung mga scenarios that are involved. And then finally, on December 13, Said Company received the balance due from Shepherd Company. So again, this is sales discount. So nagbayad na siya. What are the terms? We sold December 3. The terms are 210. So again, ignore first date, count last date. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 is within the 10 days, so you get a 2% discount. So the next question is, what is the invoice cost minus the SRA? So ito yung 5 journal entries natin so far. Ang titingnan nyo lang is yung accounts receivable. 570,000 accounts receivable minus your SRA or your accounts receivable of 20,000. So our AR balance right now is 550,000. So step 1, credit 550,000 and then multiply the discount to the 550,000. So right now it's 2%. So 550,000 times 2%, sales discount of 11,000. And then finally, you'll have debit cash of 539,000 squeezed para mag-balance yung account. Sa journal entry, parehong-pareho lang siya for perpetual and periodic. So in that case, ano yung difference? The only difference between perpetual and periodic is sa perpetual, you always match COGS whenever you have a sale or a sales returns and allowance. So itong 5.2A and 6.2A. Pero sa periodic, we don't recognize any COGS. Yun lang yung difference. The rest are the same journal entries. So this is the second difference sa periodic and perpetual. We do not compute cost of goods sold every time there's a sale at the transaction because, again, sa perpetual, COGS is calculated every time there's a sale. Sa periodic, it's only at the end of the period. Therefore, the last new ones for periodic will happen sa end of the period. So now the question is, how do we recognize cost of goods sold under the periodic inventory system? Well, at the end of the period, dun papasok yung temporary accounts natin to find our cost of goods sold. So, ito na yung last change sa periodic, which is the closing accounts, right? So, as you know, back to the cost flow, it starts with your beginning inventory, and then you have your additional purchases, so you have your total cost of goods available for sale. And then may dalawa ka lang naman na mangyayari sa cost of goods available for sale. A portion of that will be sold, so magiging cost of goods sold siya. A portion of that will be not sold, so that will be ending inventory. So with that said, ito yung way to calculate for your cost of goods sold. So number one, I really want you to be an expert in terms of this equation. Beginning inventory plus purchase less yung purchase returns and allowance and purchase discounts, add your freight in, will give you your cost of goods purchased. So purchase minus PRA minus purchase discounts is equal to your net purchases. You add your freight in, you will get your cost of goods purchased. Your cost of goods purchased plus your beginning inventory will give you your cost of goods available for sale. And dalawa lang naman yung mangyayari sa cost of goods available for sale. Either magiging ending inventory siya or cost of goods sold. So, we less the ending inventory to get cost of goods sold. So, simply put, ito lang yung gusto kong malaman nyo. Technically, it's just beginning inventory plus cost of goods purchased is cost of your goods available for sale. Your co-gas minus your ending inventory will always give you your cost of goods sold. Again, your co-gas or your cost of goods available for sale minus ending inventory will equal your cost of goods sold. Bakit lang mukhang mahirap? Because your cost of goods available for sale is just basically your beginning inventory plus purchases. Pero as you know, sa purchases, maraming nangyayari. There are 4 things that happen. The purchase, less the purchase return and allowance, less the discount, plus yung freight in. So technically, step 1, know your beginning inventory. Step 2, calculate for your cost of goods purchased. Step 3, calculate for your cost of goods available for sale. Step 4, subtract your ending inventory so that at the end, you will get your cost of goods sold. So, I'm telling you right now, this is one of the equations na ikot-ikutin namin in the exercises and everything else. So be aware and fully understand the relationships between all of these, right? So let's have a example. If I already know yung equation, I can obviously compute for cost of goods sold. So let's start with freight in. So freight in is 5,600. Next, ano yung beginning inventory natin? 40,500. So 40,500 is our beginning inventory. My next question is, how much is my cost of goods purchased? Well, my cost of goods purchased is comprised of first, my purchases. So 447,000 less my PRA or my purchase returns and allowance of 6,400 minus our discount of 12,000. My net purchases would be 428,600. Add my freight in of 5,600. I will get my cost of goods purchased of 434,200. How do I get my cost of goods available for sale? How will I get it? 40,500 plus the purchase of 434,200. My cost of goods available for sale is 474,700. So 40,500 plus 4,200 is 474,700. less your ending inventory, which is 65,000, will give me my cost of goods available for sale of 40,900,700. Ay, 409,700. So with that, ano yung journal entry natin to find cost of goods sold? Ito yung malaking journal entry na we do for periodic. Sa periodic lang to. You will have inventory based on the count, which is basically your ending inventory at 65,000. So ito. Debit. You will have your PRA na debit. You will have your purchase discount na debit because you're technically zeroing them out, right? Zero out lang natin lahat. So PRA, dati credit yan. So iti-debit mo lang ng 6,400. 12,000 yung purchase discount. And then you have your inventory beginning. So that's 40,500. So credit siya, 40,500. You have your purchases of 44,000, 447,000. And then freight in 5,600. And then ultimately, finally, you will get your COGS. So this is the pinakamahirap na journal entry for periodic. So the idea behind it is we're closing all the temporary accounts. So ano yung normal balance ng PRA and PD? Credit. So kaya ngayon, to close them, we need a debit. Purchases and freight in, their normal balance is a debit. So to close them, may credit ka. And then, ang tatandaan nyo lang is debit inventory based on the physical count, which is the ending inventory. And then credit the inventory beginning at 40,500. If you do the math, hindi yan magbabalance. The remaining will tell you your cost of goods sold at 409,700. So, ano yung suggestion ko to the people para hindi ma-overwhelm? For me, step 1, know how to do this table. So beginning inventory plus cost of goods purchased will give you your cost of goods available for sale, less ending inventory will give you your cost of goods sold. Next step, memorize this journal entry to recognize your cost of goods sold. So ito, inventory na to, debit. So ang debits ko is inventory based on count or ending inventory, PRA, PD. Ang credit ko is inventory beginning, purchases, and freight. Yun lang. So, my suggestion or another way of looking at it is, yung mga debits ko are those that happen at the end. Ending inventory, purchase returns and allowance, purchase discount. Those technically happen towards the end of a purchase cycle. Lahat ng nangyari in the beginning, i-credit ko. Inventory beginning, purchases, freight in. Those happen before sila makarating, right? So, debit, credit, and then kung ano yung remaining, that would be your cost of goods sold. And then, syempre, same lang yung closing entries. So, in summary, ano lang yung differences ng periodic and perpetual? Tatlo lang. Initially, there's no inventory account for purchases, so iibahin mo lang yung pangalan under the purchase cycle. For the sales cycle, we do not compute COGS every time we have a sale. So, mas onti yung journal entries sa periodic. And then finally, at the end of the period, we use our temporary accounts to find our cost of goods sold, which is basically this. And then, we're done, basically, for chapter 5. The last step is just mga financial statements. So there are two forms. So statement of comprehensive income. So there are two types of approach. So please be aware of the two types of the financial statements. You have the single statement approach and the two statement approach. So the single statement approach is basically this. Kaya na bahala dun sa header, you already know this. This is an income statement. Ano lang yung parts? Revenue minus expense is equal to your profit and loss. You have other comprehensive income. So, pag may mga revenue ka na other, not related to selling the inventory, it will give your total comprehensive income. So, as the name suggests, isang statement lang tayo for income statement. On the other hand, for the two-statement approach, dalawa yung statements. income statement and statement of comprehensive income. So, revenue minus expenses, profit and loss, yun lang yung ibibigay ng income statement. And then, profit and loss and other comprehensive income, total comprehensive income. So, one statement, and then binasag mo lang to make it two statements. So, aside from that, so there are two types of approach, and there are two types of forms of presentation. So, nature of expense, revenue minus expense is equal to your profit and loss. And then merong function of expense. Sale, ito, so medyo mas magulo. Wherein you just parang record it based on the types of expenses. So those are just parang ways to study. So I think this is more better discussed in terms of our exercises eventually. Pero again, I will upload this and then please take note of kayo na bahala dun sa mga types of presentations in the income statement. And then gross profit ratio, just to take note, is gross profit divided by net sales. So please take note of that. And then you have selling or distribution expenses. So expenses associated with making sales. Admin expenses, you have expenses related to general operating activities. Finance cost is basically interest expense or any financing activity like pag may umutang ka sa bank. And other income and expense are revenue gains and expenses not related to the company's main line of business. So meaning if there's so basically ang importante lang is you know the different types of expenses so that you can appreciate the function of expense. So with this, we're officially done with our theory portion. So I'll upload our exercises, so that will be due on Wednesday. Are there any questions or everything's clear pa naman so far? Any thumbs up? And then to help you, I'll again run down another example in terms of like purchases, sales, and closing entries, right? So in the last 20 minutes, sorry, Lawrence, you have a question or none?
Ay, sorry sir, napindot lang po.
So, okay. So for me, my suggestion is, if you need more exercises to understand, we can walk through the last exercises here. So I added exercises lang. So let's look again sa purchase the journal entry. So si Donna Co has these 5 transactions. So now, ano lang yung instructions for this? Prepare the journal entry to record these transactions under the perpetual inventory system. And then, meron lang parang another example na paid the balance due to cruise company instead of April 15. So for me, if we're looking at this, if there are 9 concepts, it's just making me do purchase transactions. So the first 4. So aralin natin. So ano yung inventory system na ginamit niya? That's the first question that you have to ask yourself. Ang ginamit raw niya is perpetual. So kung perpetual, ang expectation ko is my inventory account will just be inventory. Right? So let's go. Journal entry 1. On April 5, you purchased merchandise 23,000, terms 210 and 30. My first instinct here would be, okay, nagbigay ng terms. Therefore, hindi to cash payment. It's an accounts payable. So, yun lang. So, these are the 4 statements, right? So, isa-isahin lang natin. So, on journal entry or transaction 1, terms 210 and 30, I know that this is a purchase on credit. So therefore, my journal entry would be debit inventory, tataas, credit accounts payable, tataas of 23,000. So automatic, I will make a T account for the accounts payable related to this first batch of purchase na 23,000. Na some way, somehow, masi-zero out yung 23,000 na yan. So, step 1, purchase on credit. Next step is I will look at the freight. It said FOB shipping point. So automatic, I think to myself, BSP, D, BSP, SDP. So BSP, buyer shipping point, seller destination point. So since it's shipping point, who will pay? Me, the buyer. So therefore, I will pay for the freight. The freight, therefore, ano yung journal entry 2 natin? Debit inventory, credit cash of 900. On April 8, on April 7, merong extra that's not related to the inventory. So for me, pag merong mga accounts that's not related to a particular purchase, ihiwalay nyo. Ihiwalay nyo. So ito, nag-purchase raw siya ng equipment on account for 26,000. So, debit equipment, credit accounts payable. Bakit to nilagay? Nilagay siya para malito kayo on how much you have to pay. Kasi if you're gonna do a T account for accounts payable, how it would look like is your accounts payable will now balloon not from 23,000 but to 49,000. Kasi 23,000 plus 26 is 49. So, i-ignore nyo tong accounts payable na to for the meantime in terms of computing for your discount, right? So, ang titingnan nyo lang accounts payable is the ones related to your inventory. So, syempre, wag yung kakalimutan yung mga journal entries that you know from the first module. Pero, ang focus lang talaga natin here is inventory. So, anytime may journal entry that's not related to the inventory, of course, make the entry, pero only focus muna on a purchase batch, right? So now, on April 8, nag-return raw sila ng damage worth 3,000. So, alam na natin na that's credit accounts payable, debit inventory. So now, my question is, on April 15, they paid the amount kay Cruz. So, saan palagi nagkakamali yung mga students? Palagi nagkakamali yung mga students sa purchase discount. Number one, in terms of calculating whether may discount ba or wala. So, let's analyze. The terms are what? 210 and 30. The end date is, or basically, April 5. So, nagkabaliktad. The start date is April 5. The end date is April 15. How do I know April 15? Kasi 210. So, 5, IFCL. So, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So, number of days, 10. So now, kailan ka nagbayad kung April 15 yung end date of the discount period? April 15. So, did you take the discount? Yes. So, alam ko na you took the discount. Therefore, alam ko na the journal entry is debit accounts payable, credit cash, credit inventory. The question is how much? For the accounts payable, you will be tempted to include the equipment kasi may accounts payable ka dyan. But no, that's wrong. Ang accounts payable lang natin would be or invoice price of 23,000 and our purchase returns and allowance of 3,000. So my balance now therefore would be 20,000 and yun yung a-applyan ko ng 2% discount. So may 20,000 na ako dito. 20,000 times 2% is 400. Kaya 400 to. Ano yung remaining? Credit. I will squeeze in 19,600. So, ano yung sinasabi ko ulit? Every time may purchase kayo, look for the accompanying accounts payable. So, 23,000 yung purchase, may accounts payable ka na 23,000. Yun lang yung titingnan nyo. So, 23,000, nag-subtract ka ng 3,000 kasi may ni-return ka. And therefore, isi-zero out mo siya with the 20,000. And this is your journal entry. So, paano kung hindi niya tinake yung discount? Well, sa scenario B, nagbayad ka ng May 5 or May 4. So, therefore, our accounts payable would be 20,000 credit cash of 20,000. Wala ka lang discount. That's the only difference. So, how do we turn this into periodic? Right? So, same example pero ginawa lang nating periodic. So step 1, ito yung journal entry natin for perpetual. Pag ginawa natin tong periodic, sa purchase, ang mag-iiba lang is the name. Purchases lang. Purchase, 23,000, credit accounts payable. In journal entry number 2, instead of inventory, we will write freight in of 900. Journal entry number 3, instead of inventory na credit, purchase returns and allowance. In journal entry number 4, purchase discount. So this is how you turn your perpetual into your periodic. Same journal entries, nag-iba lang yung name ni inventory. And with that, you're done mastering the purchase journal entries. Next step would be our sales journal entries. So we have Daryl Company na meron siyang 3 scenarios na nangyari sa kanya. So if you look at the accounting cycle, this is the sales cycle. It's referring to journals entry 5, 6, and 7. So let's look. Again, Daryl Company is a perpetual company. So journal entry 5, on March 2, nag-sell ka around ng 90,000 worth of merchandise. The cost of the merchandise sold was 620,000. Dahil perpetual tayo, we expect 2 journal entries every time there's a sale. 1 journal entry to recognize the revenue. So that would be debit accounts receivable, credit sales revenue of 900,000. And second journal entry to match the COGS. So debit COGS, credit inventory of 620,000. On January 6, nag-return raw siya ng 90,000 worth of merchandise. The cost of the return merchandise was 62,000. So, anong gagawin natin? 2 journal entries. They recognize a portion of the revenue received via the journal entry. Debit sales returns and allowance, 90,000. Credit accounts receivable of 90,000. And then, we have kailangan yung inventory rin natin, babaliktad natin ng 62,000 credit COGS. So, as you can see, nagre-reverse lang. Nagre-reverse lang. Pero instead of sales revenue, we use a new account called sales return and allowance. And then finally, in number 7, on March 12, receive the balance due. So again, kayo na bahala kung may discount or what. Wala. So ito lang, simple lang yung statement. On March 12, receive the balance due from the Mon company. So automatic, every time may makaka-receive ka ng pera, you ask yourself, may sales discount ba? So again, what would be our framework? First step, look at the terms. The terms is 210. The start date is March 12. So the start date is March 2. So IFCL. March 2 is the first day. So ignore first day. So 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So my end date is March 12. Sakto, March 12 ka binayaran. So may discount pa siya? The answer is yes. Therefore, my expected journal entry here would be debit cash, debit sales discount, credit accounts receivable. So how much is my accounts receivable? Let's compute. My invoice price of 900,000 minus my sales return allowance of 90,000. My balance, therefore, is 810,000. So automatic my credit is 810,000. Next, i-multiply ko yung 2% dito sa 810,000 na to. So my discount is 16,200. And therefore, my cash would be squeezed, which is 793,800. So now we're done with our perpetual. So tatlo lang yung journal entries. Ay tatlo lang sets. For purchase, for sale, we have 2 journal entries. For the sales returns and allowance, we have 2 journal entries and then 1 journal entry for the sales discount. How do we turn this into periodic? So for periodic, we only compute cost of goods every time there's a sales transaction. So ito yung perpetual, gawin natin siyang periodic. So, naging periodic. Journal entry 5. Nagka-sale. Ano yung journal entry mo if it's periodic? Well, actually, pareho lang si 5.1A, pero si 5.2A wala. There is no entry to recognize COGS. For sales returns and allowance, pareho lang si journal entry 6.1. Same lang siya. Pero wala kang i-recognize na COGS ulit. So, wala rin yan. And then, pareho lang si journal entry 7. So, sa periodic, pare-pareho lang siya. Ang wala lang sa kanya is the cost of goods sold impact. Yun lang yung difference ni perpetual and ni periodic. And then finally, let's master closing transactions. So, may binigay sa'yo. Ano yung closing entries mo for 8 and 9? So, yung physical count raw is 13,900. On record is 15,000. So, ano susundin natin? The physical count or the record? We always follow the physical count. So, therefore, if 15,000 inventory natin, kailangan natin siyang pababaan ng how much? We have to decrease our inventory by 1,100. Therefore, our journal entry would be credit inventory 1,100 kasi bumaba siya. And then, ano yung pangpuno? COGS. Debit COGS of 1,100 to lower or to the physical count. So, our old COGS was 60,000. With our journal entry, tataas yung cost of goods sold natin, 61,100. So, dalawang yung nangyayari. Pag bumaba si inventory, tumataas yung cost of goods sold natin. Something to think about in terms of this. So, again, ito lang naman yung journal entries for closing. And then finally, let's just close everything. Step 1, let's close the revenue account. So, given the information, ang kailangan ko lang i-memorize nyo is that sales revenue debit, credit sales SRA, credit sales discount. So that you will arrive with your income summary of 112,000. Ito lang yung kakaiba for the merchandising operations. Ito lang. For expense accounts, may income summary ka of 90,100. And then you just take note of your COGS and then you have operating expenses of 29,000. And then close the income summary to the capital. So now our income summary is what? Ang mas malaki is the credit of 22,000. So this is a net income. So net income, kaya credit owner's capital of 22,000. So yun lang yung closing entries. And with that, you're done already with the full cycle. So yun. So one module down. So just to end, we're one module down, 2 more to go. If you want to succeed in module 2, the super important part is balikan nyo tong 2 recordings na to and then the exercises. And then I will announce when our quiz will be given the elections. So yun lang. Are there any questions? Justin, Lawrence, Luther, Vicky? Yeah, thank you so much for staying. If not, kindly thumbs up so that we can end the recording already. Okay. If everything's clear,